Today, we're going to pop the hood on an absolute giant of the industrial world, Cummins. Their engines are literally the heartbeat of the economy, powering everything from big rigs to data centers. So their financial health, yeah, it's a pretty big deal for all of us. A quarterly report from a company like Cummins is more than just a bunch of numbers on a page. It's a signal. It tells us a story about where the global economy is heading. So the big question is, what is this latest report telling us right now?
So is the engine sputtering, or is it running strong? On the surface, the answer seems pretty simple, and honestly, not all that great. But as you're about to see, the real story here is, well, it's way more complicated than that. All right, let's start with the headline scorecard. These are the big, flashy numbers that everyone sees first, and at a glance, they really do paint a picture of a pretty tough quarter for Cummins. First up, total revenue. It came in at $8.32 billion. Now that sounds like a ton of money, right? But it's actually down 2% from the $8.46 billion they pulled in this time last year. It's a slight dip, for sure, but it's a dip. But this is where the story gets a lot more dramatic. Net income, that's their bottom line profit, was just $536 million. That is a steep 34% drop from the $809 million they made a year ago. A fall that big? Yeah, that always gets people's attention. And of course, that hits investors directly. Earnings per share also fell by that same 34%, dropping from $5.86 all the way down to $3.86. So just looking at these numbers, you'd think things are looking pretty grim. But that is not the whole story. And this brings us to what's really going on. It's like a tale of two different markets. Once you look past those big headline numbers, you find a company where some parts are struggling, while other parts are, well, they're absolutely booming. This table really breaks it all down. I mean, just look at the contrast here. The classic engine and components businesses, the stuff that goes into trucks, saw sales fall by 11 and 15%. Ouch. But then you look at the other side. Distribution and power systems grew by 7 and a whopping 18%. This chart just makes it crystal clear. On one hand, you've got the engine segment, and it's really feeling the pain from a weak trucking market in North America. But on the other hand, the power system segment is just firing on all cylinders. So what on earth is driving that incredible growth? The answer is probably one of the biggest tech trends on the entire planet: artificial intelligence. You see, that power systems segment makes these huge generators, and demand is just surging from data centers that need incredible amounts of power to run all things AI and cloud computing. It's this amazing link between old-school heavy industry and the absolute cutting edge of technology. Okay, so if power systems is booming like that, why did the company's overall profit fall off a cliff? Well, that brings us to the next big piece of this puzzle: a major one-time financial hit. So what was it? What was the anchor that drags the whole profit number down so much, even with that amazing performance? The answer, believe it or not, comes down to a single line item on the accounting sheet. So to get this, we have to talk about something called a goodwill impairment. Let me just break it down. Imagine you buy a classic car for a lot of money because you think it's going to be worth a fortune someday. But then the market for that car just cools off. An impairment is basically the company admitting on paper, hey, this thing we bought isn't worth what we paid anymore, and they have to book that difference as a loss. And in this quarter, Cummins took a massive $240 million one of these non-cash charges. And get this, it all happened in their Accelera segment. That's the division they created to focus on future stuff, like hydrogen and electric power. So the setback happened in the exact area where they're betting on the future. And according to their report, the reasons were pretty clear. The market for hydrogen technology is just getting tougher, government incentives are drying up, and customers just aren't as interested as they were before. It's a really significant bump in their whole new energy plan. Okay, so profits are down. The Future Tech division took a huge hit. This story sounds pretty negative, right? Well, hold on, because this is where we get a really surprising twist. When you look beyond that profit number and check the company's actual financial engine, things look way, way stronger than you'd think. Okay, this is so important to understand. For the first 9 months of the year, net income was way down, but cash from operations, it absolutely skyrocketed. It went from just $65 million last year to $2.1 billion this year. How? Remember that $240 million write-down? It was a non-cash charge. It hurts profit on paper, but it didn't actually take any cash out of the bank. This incredible surge in cash flow shows the underlying business is actually very, very healthy.
And here's another great sign of stability. The company's debt-to-capital ratio, which is a key way to measure financial health, it actually got a little bit better, down to 36.8%. So despite a rough quarter for profit, the company's actual foundation, its balance sheet, is rock solid.
So where does all of this leave Cummins? Well, for our last section, let's look at the road ahead, because it is so clear from this report that the company is navigating a major fork in the road. Here's kind of the summary of what management sees coming down the pike. On the bright side, they expect that AI-fueled demand for their power systems to stay really strong, and their aftermarket parts business should be stable. But the challenge is that weak truck market isn't going away anytime soon, and there is just massive uncertainty hanging over their new energy plans.
This quote, straight from the report, really tells you how seriously they're taking the problems in that Accelera segment. They're actively pursuing a strategic review. That's corporate speak for big changes are coming, and it could even mean more financial charges down the road. And that really brings us to the final critical question. You have Cummins, a company at a true crossroads. Its traditional business is slowing down. Its big bet on the future of energy has just hit a major wall. But a completely different part of its business is booming, all thanks to AI. So can this industrial giant actually manage to power through this incredibly complex turn? The answer to that is going to define their future.